Good afternoon, good night, good morning, wherever you're tuned in from. Welcome to the BitLab Academy daily stream. My name is Kelly Kellum. Welcome to the show. We've got a great show lined up with a wonderful guest, somebody I've been following for a few years. And we're going to not just break down charts. This stream, as you know, for all of you that have been here before, and if this is your first time, it's okay. I guarantee you it's not going to be your only time, because we don't just break down charts and give you targets. We break down the concepts and the strategies, as well as doing some TA along the way, because it's all about your operating system right here. You can't have good output if you don't have good input. And the input starts with how you think about things, what your strategy is, and what your plan of attack is. If you don't have a plan, if you don't have a strategy, then you are going to be held hostage by your emotions. And as we've talked about on this channel, if you're an emotional trader, then all you're going to do is donate dollars for other people that have a strategy to buy better boats and to buy better cards. So, not cards, but cars. So with that being said, hit that like button, hit that subscribe button, ding that bell, let the mainstream media, the new mainstream media that is YouTube, let them know that you're into crypto content, because it doesn't just help this channel, it helps the entire crypto ecosystem. So with that being said, I'm going to jump over to my screen here. We've got a wonderful guest lined up, but before I bring them on, make sure you come over here to the Twitter verse here. Make sure you come give me a follow here, and make sure you come to the BitLab Academy page and you retweet today's daily tweet, whichever, you can do any of the days, but we do a giveaway every Friday. We randomly pick each day. So come in, retweet today's daily tweet. As you can tell, this is a premiere. I will be live in chat. We are recording this a Monday night. So we're going to be talking not exactly on the 1 hour chart. We're going to be talking strategy. We're going to be talking concepts. How do you go from zero to not just hero, but somebody that has a life set up for themselves and then maintain that. With that being said, our guest is Mr. MDX Crypto. You can find him here at MDX Crypto and on his YouTube page. I'll bring it up here again in a bit and bringing him on to the stream. So happy to have you here. How you doing, good sir? Thank you for being here with our community.
Yeah, man. Pleasure, dude. Welcome to your community, to me. I will welcome you to me. Yes, how's it going, man? It's we met on some Twitter Spaces actually, so it's yeah, great to be on, man, and I appreciate having me on, and we can talk about some trading and some stuff. We good?
No, absolutely, man. I appreciate you being here, and for everybody, if you don't know who this colorful gentleman is, he's carved a life for himself out of what I think most of you that are here watching this stream or any other stream that's crypto content related, you're interested at some level, of course, but it doesn't pay just to be interested. It pays to be interested, learn, and then put that knowledge to the pavement, figuring it out. So before we dive into just this crypto millionaire strategy, let's sort of back it up just a little bit. I'm curious, Mr. MDX, do you have another name you like to go by?
Yeah, MDX is cool, man, but you can call me Max. It's Max or MDX, whatever you want to call me.
I'll call you MDX, because that way it'll get into people's brains to where to find you. And you can find him there. You can see the handle right below his name there. But when you were starting, I know you were doing some traditional trading, traditional investment before you got into crypto. I think a lot of people forget, and I've talked about this a lot on my show, people look at athletes, some of the best in the world, whether that's Olympic athletes, Tiger Woods, LeBron James, it doesn't matter. These top athletes aren't just God-gifted bodies and talent. They are God-gifted at bodies and talent with also having the drive and ambition to always learn, always move forward. So let's back it up to the fundamentals. This is a focus on fundamentals first, and then we're going to dive into a bunch of charts and some strategies. So stick with us here, and everybody hit that like button, hit that subscribe button, and ding that bell. So MDX, when you were starting out, I'm sure something got your beak wet a little bit. I don't know if it was a family member, a friend, or what, but talk me through your first big loss and how you dealt with it.
My first big loss. My first big loss was probably, really in trading. Wasn't like I did a lot of simulations and a lot of not with real money, basically paper trading. But I think my biggest loss was probably just like my thought process of thinking I could be good at something and then failing massively in terms of gains and money. When I was trading FX markets, doing pip charts, trying to fucking pull out 0.3%. I said I wouldn't swear too much, but 0.3% on a chart, trying to learn bar charts from my mentor. My biggest loss was probably just grinding for months and not making anything, if not years, just making nothing, making $600 one day, losing $1,000 the next, making $400, losing 2,000, making 2,000, and then having this kind of up and down period. And the loss was time, lost a lot of time and mistakes, but obviously you learn from those mistakes, and lost a lot of confidence in my ability to trade, and did lose money. But at that point, it was okay because at the beginning I didn't have that much money because I made my money in trading, so I didn't lose that much, which is a godsend, because it's a blessing in disguise. Because a lot of guys who come into trading late with money, they end up losing a lot of money, and that actually can be a really difficult start. So I didn't lose that much when I was trading FX markets. I was in Australia, and I was trading the Great British Pound to the Aussie dollar because I'm English. So I thought I had an edge in the English market, and also I was in Australia. I found that all that shit trying to have an edge by being English meant nothing, because all the news and the media didn't mean anything. And I just thinking about these weird, oh, I know what the news is and I know what the narrative is and the government's doing this, and I thought it would all make me money, but it didn't. It just made me actually lose more, because when you become very confident in your idea and you don't have a stop because you're so confident in it, that's when you lose all the money. So the loss really for me, okay, and I'll tell you like a specific trade. I think I lost like 8K. I think I was long on some sort of equity market, and it just the token went, or this is the stock at the time. The actual company basically didn't like pan out, and I didn't have a stop loss, and I lost all the money, and that was it. It was like $8,000. I remember it was some stupid obscure Russell, and that was probably one of my biggest losses at the beginning. But I lost more actually as I got better at trading, or let's just say better, but had made more money. I actually lost a lot more further down the line, but we can talk about that later.
Well, I guess it's also a question of like the percentage of what you have, because you can lose $1,000 and it could be 90% of what, because you just started, and you could also lose $100,000 and it doesn't matter. I don't want to say it doesn't matter, but it has less of an impact if you have a lot more capital. So, and this also weighs on the individual trading as well, because as you said, there's something about the dynamics. I noticed when I had less money, I was way more reckless with my money. The more money I got, the more money I had in my coffers, in my investments and whatever it was. Somehow I also started becoming more frugal on what I spent at restaurants. I started being like, because I started seeing especially in crypto, you see, if I'm spending, think about the Bitcoin pizza. Somebody that spent all that Bitcoin on pizza, that pizza costs them hundreds of millions of dollars. So I try to, I apply that to my daily life now, while still trying to, live not tied down to the strings of frugality, still allowing yourself to treat yourself a little bit. But no, that's interesting.
You make a good point, man. It's not about the amount of money, it's about the percentage of the money. And it's also the biggest lesson and the biggest loss was not learning risk management at the beginning. But that's fine, because now we understand it, because you make the loss. But I think you make a good point there.
Yeah. So when you got into crypto, did you get in at the time pre-derivatives or post-derivatives? And did you already have some derivatives experience with options and other stuff before getting into crypto?
Yeah, so I didn't ever trade derivatives in crypto until about 2019. So I was probably 2018 actually. What was the BitMEX days? Let me just think in my head. The years are literally flying by. I think it was 2017, 18. That's when I started looking at BitMEX. I traded on CFDs and I was doing a little bit of leverage on other stuff, but most of my stuff really was FX trading, FX markets. It wasn't leverage. It was just basically buying and selling and trying to make the middle in between. But derivatives was something which I experimented with in FX, but it wasn't something which I thought would even be a crypto thing. And I remember when I first got into it, I was really, really reluctant to get into it. And I made all my money in 2017 in the crypto bull market run without any leverage. Like it was that first run from, I think it was like $600 to 20,000 basically. That was no leverage at all. And then got into derivatives probably 2018, 19, really dived down that rabbit hole. Had a good run in 2019, actually traded gold on Femex actually, because they used to have gold. You could trade gold with Bitcoin as a collateral with leverage. And I thought that was fucking amazing. I was like, yo, this is awesome. Because I could hold Bitcoin and trade gold at the same time. Bitcoin's just going flat. It was at 6K for like a year. Literally, we're just bouncing off 6K. So it's a really nice collateral based loan, or you could use that as collateral to then get that loan for the derivatives of the gold. But yeah, I think that was it. And I think the market in crypto has matured so quickly as well. I think because traditional markets was obviously quite mature at that point. Crypto, I think, just trading on the internet in general since the early 1990s, late 1980s. You know, fast forward to 2008, you know, you've already got all that infrastructure built, so crypto can like really on ramp that quickly. So crypto's only been really 10 years, but it's pretty much got everything you could see now in any other market, if not more advanced. So it's pretty interesting, and I like the way it's one-to-one leverage. Like if you get licked, you can't go into real margin. You can't really go underwater really, because you can't put your house on the line, you can't put your car on the line. I always say you can't put your wife on the line. You can't put shit on the line, really on the line, because it's a zero sum. Whatever you put in, that's why KYC is big a deal in crypto, because whatever you put in is the only amount you can lose. So in other markets, that's actually a different story. You know, you can use your bank, you can use your cash, you can use your other equity to then get a loan on that, and then put that into another account and say, okay, well, I'll back it up more and go into crazy margins. And then if the house price goes down 50% and you're using your house as the collateral for your fucking long to keep you, then it's a real big problem. So that's what you saw in 2008, basically.
Yeah, I mean, in 2016, 2017, 2016 into 17, I spot traded basically from a zero account up to nearly $100,000 and a spot, you know, and then derivatives hit the market, and I was like, man, I'm going to turn this 100K into 10 million. Based on my stats, this is going to be 10 million in like a week. I'll tell you what, 3 days later, I had $70,000 down, and I was like, I never thought about jumping out a window, but I could understand in the great collapse of 1929 when people's entire livelihoods, and back then everything was so much slower. Nowadays, if you lose money, it's terrible. But the velocity of money is so much faster. So there's almost a different consideration. Also, I mean, look at the inflation rate over, since 1971, it's US dollars down like 98%. Think about that velocity of money, right? So like when you're looking at markets now, I'm really glad you brought up the spot thing, because so many people, and all of us.
We should talk about this. It's interesting. We should talk about this more.
But humanity is plagued with this need to compare ourselves to others, and we look up, and then we want to do it. We think that we can shortcut ourselves to getting to where that person is, because we learned the quick pill, the magic pill to get there. And for a lot of people, they think leverage trading is to do that. Now, you've spoken about this before, and I want you to you can kind of elaborate on this now a bit, that the leverage trading isn't necessarily bad. The purpose of leverage trading is actually a healthy risk management tool to hedge positions when you have larger capital, so you don't have to expose all your capital to risk. The truth is, most retail sees that, and they throw in 80%, some 100% of their entire portfolio, throw it on a 20x trade because they see crypto face on a trade, and they don't know why he's up $2 million, and they get licked out in a second. They don't realize he's live 4 hours or 4 days after that trade started, and his entry was $4,000 below. So we all have to trade our own strategy. Could you kind of just talk about that a little bit, and just any thoughts on that?
Yeah, I'll say one thing to your point before. Like, I think just genetically, me as a human being I am generally quite frugal, and I don't take that much risk in general. So like, I just know who I am as a person. I don't really put that much risk on the table. Just in small things like, when you went to the casino with your friends, I was never the guy who was like sitting there forever. I'm not the guy who's like trying to bet on cards flipping or dice or, all these things. So I've never really been like that as a human being. And I think that definitely helped me at the beginning, because me being frugal meant that I didn't have the appetite to really go into those leverage trades. I never felt like comfortable with it. So that's always been good for me. I've had problems in the past. We've all gone tilt crazy and gone down the rabbit hole and tried to chase, and we've all been there, of course. But for me, I'll tell you just one word of advice to anyone who's starting out: just be more frugal than, be more reserved than you think. Because if, like you said, if everyone's making millions using leverage, it'll be too easy. Like, not everyone can't be good at it. There's got to be someone who's shit at it. And if it's really easy, everybody would do it. So it's obviously not easy to make money in it. So the thing in the beginning is just be more frugal, be more hesitant, and don't think you're right all the time. It's just going to get you wrecked. And your other question was talking about leverage in terms of what it is. It's like a fundamental tool. Leverage is really, really beneficial for any market. it's just really helpful because it allows people to sell without actually selling. And that's amazing because it's a product for companies, exchanges to get more customers, not to actually go and sell you put in some Bitcoin. Okay, now I'm going to sell my Bitcoin. The exchange then don't have the Bitcoin. You've moved it out the exchange. It's a way of keeping customers, keeping volume high. And also the real purpose of leverage, if you think about what actually a short is, like a manual short is you're taking a loan from someone and you're buying the asset. You're waiting for that asset, or you're holding the money, right? You're waiting for the asset to fall and then buying it with the loan and keeping the difference. So that's all like really a short is. It's not like anything crazy. The long and short side is slightly different. The leverage comes into it, but people think the exchange are like giving you all this free money. They're not actually giving you anything. Like there's nothing on the accounts and on the order books and on the actual balance sheet of their company and all the spreadsheets. They're not giving you anything. They're just saying that you can basically put less in and then have a higher risk and just get licked if you hit that. So they're not giving you anything. How I look at it is, like for instance, you have 10 Bitcoin on an exchange. You want to sell 10 Bitcoin, but they just let you sell 10 Bitcoin with 1 Bitcoin. That's all they're doing, and they have enough liquidity to do that. So they're basically just saying, we'll give you this product, but we'll say like, now you've got this extra liquidity from us. We offer the liquidity for a higher risk, and that's in essence what you're doing with exchanges. They're not giving you anything really. They're just saying take a little bit more risk or increase your size.
And the long to short ratios tend to be fairly balanced as well. So I was talking about it on yesterday's stream that when you see price action inching up to $64,000, it's crazy to really consider the fact that somebody's taking huge profits at that level, but the only way they're able to is because somebody hype buyed, they without a plan, they bought the hype. And so somebody's buying and then having to either endure a loss or capitulate at a lower price. Whereas the smart money bought when everybody else was fearful. Another thing too, with leverage trading, for anybody that's not sure what, for instance, funding rates are. If you go to coinglass.com, great free website. One of the reasons why you see those funding rates and what the purpose of them are is to help keep the markets balanced, because if everybody can just take leverage and there's no penalty, then not penalty, but there's no added risk. If 100% of the market's long, then exchanges would absolutely fail, because then there would be no liquidity to pay each other. So it causes benefit. It adds sort of incentive for longs and shorts, because if the majority is going long, then you see positive funding rates, and they're having to pay for the shorts, and vice versa for the shorts to the longs. So with that being said,
it keeps the exchanges solvent.
Yeah,
because they don't want to be too overexposed themselves. That's why I have funds like emergency funds like BitMEX, and you have funds which are like stored to basically be able to soak up the liquidity if it comes on the other side. And you need funding to say, okay, well, look, if everyone's taking this liquidity on the long side, we need to fill up another pool on the other side just to make sure that we can actually stay solvent on the books.
It's almost as if these derivatives exchanges, other than FTX, it's almost as if these derivatives exchanges have a better economical plan than the U.S. monetary policy, because for some reason they can't figure out a way to keep their budgets balanced. But with that being said, we'll one more point on the leverage topic, and then we'll get into some strategy and mindset stuff. The news came out yesterday that the CME futures here in the U.S. is now going to be offering, I think it's 24 hours, 1 day options expiry, futures expiry. How do you think that's going to have any impact on more localized price action, or is that going to be something that just helps continue the trend in whatever trend it's in?
Yeah, I used to talk about these kind of things a lot, but I always go back to the same old point. I always say it's like, I don't know. And like it doesn't, and the reason I don't know is because I don't look at it, because I know it's not quantifiable in any way. Like me having an idea of what might happen, it's not going to change my strategy. So at the beginning, I used to and fro about like, oh, what might happen with this thing, or what might happen with that, or do you think the China pump, or do you think Donald Trump being in presidency is going to make it go up? Like, I can talk and have a conversation, you drink a beer about this for a fucking 2 years if you want, but it's not actually going to change anything. And I feel like with trading, there's so much noise. You really do need to whittle down the things which are important. I use an analogy, you might have heard it, where it's like if you got dropped on a desert island, you start to prioritize things really quickly. Food, shelter, and survival things, right? You're like trying to defend yourself with spears. or whatever environment you're in, right? You really begin to prioritize, like seriously, when you're in like some sort of like life-threatening situation, like a desert island or dropped in the middle of a jungle. Like you're not going around and taking selfies and doing sightseeing and drinking, like having a conversation. You're doing the really stuff you need to do to survive. And I think people need to do that with trading. They need to prioritize. You need to just stop and think, what is the most fucking important thing right now? And the most important thing is your money, your equity, which is your ammunition. You need a gun as well. You need an exchange. You need a gun. So you need a gun, you need ammo, which is money. And you need to have risk management. You need to protect that. And like, that's really what you need to do. And then just cut all the noise. Like, who cares what happens with the CME or who cares what happens with futures expiring or options data? Like, all these things are there just to aid you around things which you really need to put dear to you. And the things which are dear to you is risk management, your money, and basically having some sort of edge or strategy which you deem good at any specific market environment, whether it's a range or a trend, or you're investing or you're looking for growth or whatever. Like, really whittled it down and try and make sure that you don't get fucking, just you go to America and everyone's just walking around fat, taking selfies, and they're doing all these things which don't really mean anything. Like, it's kind of what people do in trading. They're just talking about all this shit which doesn't really mean anything. But I've said that a lot of times, and I'll just have to tell you, I don't know. I would just say that whenever I look at imbalances on markets, say options, say there's a stupid amount of puts. It's like, well, why is everyone trying to why is everyone saying this is going down? Usually goes the other way. There's a huge amount of longs, right? I'm like, why is everybody long? So like the contrarian side I get, right? I use that all the time, but I wouldn't say like, oh, are we going to get an expiry date? It's like saying what happens with, the Shanghai, Shanghai. Everyone's like, oh, there's going to be this huge amount of new supply coming onto the books. Well, okay, there might be more supply, but it doesn't necessarily mean sellers. And also there's the other whole side that the upgrade's successful. So you can talk about this forever, but it's not quantifiable. There's no evidence. There's not even any evidence that when Bitcoin went down to $3,700 because of COVID, apparently, there's no evidence that was because of COVID. There's no survey which goes around and says, did you sell your Bitcoin because of COVID-19 because you were scared? There's no survey or anything. There's no evidence. You can say, yes, it looks correlated. If it's a duck, it looks like a duck, it quacks like a duck, whatever. But there's actually no actual evidence for that. So what's the fucking point anyway? Just trade the price action. And I'll get into this later, but strictly technicals before fundamentals. That's what I believe in.
No, I mean, I appreciate that. There's some people that, I guess it also goes back to the most fundamental part of it is understanding. And I've said this for anybody watching, I apologize, but I don't, because you need to hear this over and over and over again, just like a professional golfer swings 10,000 times sometimes before they even, play a hole of golf. And then after they've actually, they could be in the middle of the round. They still have their coach. That after the round, they're a professional. They have a coach that walks them through it, the fundamentals. And that is right now, understanding what your time horizon is, understanding what your strategy is, and sticking to that. If you're watching my show or you're watching MDX and he's talking about where a long or short is, and you're confused because somebody else was talking about an accumulation stage, well, first you need to identify what was your strategy. They may be talking about swing trading or scalp trading, a 15-minute or 45-minute chart. And so if they're talking about selling and you're like thinking, I just bought, if your time horizon is 2 years, then you have to understand the narrative and why people are talking about those things. So with that being said, we've been talking already for almost 25 minutes. Let's pull up some charts. Let's do it, man. People, you can
show me some charts, or shall I do my screen? No, I don't know if mine's set up.
I'm gonna let you be the honcho here with your charts. We can basically bring up. We can start with. How about this? I'll start you with this. It's completely open-ended. Being a crypto trader and investor, what are 3 charts that you're following primarily right now? And then we can go on from there, build into other projects. And then at the end, we'll get into some little gems you got and maybe some things you want to look at. But, where we're at in the market cycle right now, what are you seeing and what are you looking at to give you your sort of base layer? And then we can build off from there.
I have basically I have a cycle, or you could say a system, and it's about 13 between 13 and 18 things, which I cycle like constantly on crypto. It's the same fucking thing every single day. I'll give you like the main 3. We can go through some other ones. Obviously, the price of Bitcoin is one of them. I do look at the Dixie a lot as well, and I do look at like generally For looking for a bull market, I'll look for like moving averages as well and like SR. So like in terms of, I'll get my charts up. Let me show you my charts right now. Okay.
And
I'll
as
share
you're
my
while
screen.
you're pulling up your screen, I'm just gonna. Yeah, yes, I can. Just 1 second. If you guys have not followed MDX Crypto on Twitter, come and follow him here at MDX Crypto, and you can also check out his. Actually, this is his YouTube page at MDX Crypto. I believe it's the same here. Yeah, at MDX Crypto. Make sure you give him a follow. And again, come over here to BitLab Academy, retweet today's promo tweet for the day, be entered to win some stuff. And I'm going to throw it right back over to you, good sir. Why don't you take us away with some charts? Share some magic, baby.
Yeah. So just to reiterate that point, it's obviously the Bitcoin price. I do look at Dixie a lot. I look at moving averages. I look at a whole different things. I actually look at total 2 as well and the Bitcoin dominance. Just to give a general idea of like where's Bitcoin heading, just like if the dominance is rising, usually price is looking pretty good. You can see over a long period of time we've been coming down in dominance, but actually right now we are beginning to retest or potentially try and break that prior high, which I do quite like for Bitcoin. A lot of people think that, altcoins are going to have this alt season right now. Obviously, this is time sensitive, what we're talking about, but, I actually see, I think it's unlikely. I think Bitcoin is the one which really is going to go first. I think most cycles are drawn in by, and this is in any market, this is not just Bitcoin, but the top capitalized things in any market usually go first because that's what has the most certainty and trust. And then the money trickles down. You see that with Apple, Apple usually pumps and then other shit goes up with it in that sector. Or you see something like Tesla pumping and then like other electric car companies start going up. It's the same thing over and over again. So in terms of Bitcoin right now, I'll just give a little update. I've said on my Twitter a few times because I analyze the market and then I also show trades. Okay, it's two different things. You've spoken about this, I think, before. We've actually spoken about this on a Twitter space. So in terms of analyzing the market right now, I've said for a while I think it's between my last video was around here. I said between here and 32K. I think we're going to see some resistance, potentially come back up. If we get a lower high, I do actually think we'll see 25,000. And I think actually around here, this zone, in terms of this is only 2 points of data, but I do think this could be quite significant in the future. I think that if we do lose about $28,000, I think we go to 25 and we come to around this trend line at some point. I think we're just going to wishy-washy come back, potentially hit it up as resistance. So I'd say that, if we do get a deviation of this high, I think it's quite likely we're going to come to $25,000. As of right now, actually, and this is what always confuses people. As of right now, I would look to buy Bitcoin though, because we're at support. So analyzing the market is, I think we'll go 25 if we lose a level, but it doesn't mean I'm bearish. It means that I'm looking to buy actually at the moment because this level here is actually pretty significant. It's actually the prior highs. Have a look at you right now, legends. Look at this little one. So you got this high here, which is the highest price Bitcoin went to in this range, which is actually important. Along here, you can see it's come back down to it. And then we have a longer term trend or a longer term horizontal support, which comes all the way back from, we all know, when we actually retested $30,000 for the about. So this is actually retesting it as support, probably a year ago now, actually getting on for a year. So I actually am looking to buy here in terms of if I was doing a short-term trade, I would look to buy. I have probably got medium-term, quite a lot of cash on the side, but I am looking to buy. That's what I'm trying to do around here. Maybe something like this back up, and then you have to wait until you're going to break the high. Then you can start drawing trend lines, start fanning around, and then have your fun. But I think this is a buy here. And if we come back down, say we came up and then we lost it in terms of a lower high, back down, this level around 28 is really important. This is the line in the sand. If we lose that, it's 25, pretty certain. The likely is quite high. Likelihood is quite high. Yeah. And then I think we go 25, and then I reckon we'll have another go. But looking at this market structure right now, just to go a little bit macro on you, I'm kind of all over the place, but I'm just going to talk from the hip on this one.
Yeah.
The market, on the 4 hour, on a slightly higher time frames, it's ticking a lot of boxes. Like I said, you have a process, and my process for a bull market actually is determined by being above the 200-day moving average, having high volume on. Let me just get this up for this. Is some of my indicators on MDX Algo. Let me just quickly get this for you, because I actually do use this quite a lot. So you can see here, this is an indicator which is showing you an oscillation of momentum, but you can see this green area here. This is actually showing you like money flow or market flow, you can call it. And it's just showing you like, is the volume generally increasing or decreasing? And people overlook this a lot, but it's very important because generally speaking, if you've got more buy pressure coming in, like volume, generally the market's going to rise. Not in all cases, but quite a lot of the time. So you can see this green area here is actually going up, which is, in my opinion, that shows, or it's just very clearly stating that volume's increasing on higher time frames, which I think is a good sign. So you're above the 200-day moving average, you got increasing buy volume, and also we now have a 100% confirmed higher low, because a higher low is confirmed by breaking the prior high. So we've made it. We've got a higher low. This is all pointing towards being a bull market, but trading is not an exact science. And I do have certain times where I'll be in a situation where I'll say, there's one more variant I need to see. And that last variant for me is holding above 30K. Get rid of that little bastard, little midgie. So holding above around $30,000. I want to see a weekly close above this. And at the start of the week, it looked pretty good, but look, it's not the end of the week yet. So here is it's pretty decent. And then we need to see a weekly close, in my opinion. That's what I got for you, brother.
No, I really like that. And so for anybody, for all of you that are watching, what I really want you to take away from this, because again, this is being recorded Monday afternoon. So wherever, it doesn't matter where the price is tomorrow. What I really want you to pay attention to is the methodology of how he's going through looking at levels. And then, okay, he sees a level, the previous high, for instance, where we just pulled back to. I can actually annotate your chart here. Hold on, let me see, annotate.
Yeah.
Where, right here, where we pulled back to this level right here, which was basically right at the previous high, then what do we always talk about? We always talk about looking left. And what you saw him do after he saw this, he goes, okay, well, how strong is this level? Well, we pushed up into a very key level, being a lot of macro support in the previous cycle. But this level that we also are touching on right now is a part of this level. So we are really testing a really very important structural area that it doesn't mean by us losing that area right there at $30,000. Of course, okay, we wick down below. We're talking about the weekly time frame. We wick down below this. Okay, on the weekly, if we close below $30,000, this would definitely indicate that we're likely coming down somewhere in this region down here. Now, what I really want people to understand is that we always look to the left, no matter how tight you think a level might be in this zone. How strong is this level looking in the left of previous price action? Now, it's a whole different discussion if we're into price discovery, of course. But the benefit that we have right now is as much of a headache as it may seem. You do yourself a disservice by not zooming out. Not zooming out literally leaves you in doubt, because zooming out allows you to see the roadmap of all the levels of previous areas of where price action was. And then also seeing this key moving average, this 200 moving average, that's also perfectly in line with this structure right here. So just curious, when you're looking at this, I know you said you look at the Dixie. Are you, some people do, some people don't. Are you following the breakdown of the USDT dominance as well, showing that liquidity flowing back in, or what do you view there?
I've actually been watching the Dixie just in general for a long time, actually, because I think the Dixie is really important. It is essentially at the moment, it is the global reserve. And, if you do see weakness in it, it can correlate to things happening in other markets, obviously. I think gold is much more correlated than Bitcoin, because obviously gold and the US dollar are literally, they're tied at the hip in essence, because of the nature of what gold is and the nature of what dollars are. They're just basically printed on behalf of gold. But this is an interesting chart, and I actually do think that the Dixie is not going to just go completely down to this next downtrend line here. I think unlikely that we're going to come into this in this go. It doesn't mean it's impossible. If that happens, generally speaking, that means people are going to be leaving the dollar and buying things which aren't the dollar. So we mean that people are going to be buying things like stock, like Bitcoin, like gold. Doesn't mean it has to, there's no evidence to say which one has it the most.
Right.
These markets are chaotic. Anything can happen. For all we could say, all of it could go into real estate, all of it could go into freaking gold. Yes. But Bitcoin will probably have a good time, because risk will generally have a little bit. I just call it something like, it'll be, it'll have a less, say, it'll have more easy pressure in terms of there's not as much pressure on the downside. It'll just alleviate it a little bit. That's probably the best word for it. To allow it to rise.
Do you generally track Dixie more often than the USDT dominance, or is that not a chart you generally follow?
USDT dominance. Not really. I don't really look at it that much. No, I kind of stick to the Dixie. USDT dominance would be how much is USDT taking over the market of crypto, right? That's what
Right,
the
right.
market should.
So,
Yeah, yeah.
I mean,
I look at
I like that chart just because, you know, if it's going up, that means capital is coming out of crypto assets, but staying in the crypto ecosystem because it's on the sideline. So it's like a dry powder gauge. And if you're seeing the dominance drop, then you're seeing the liquidity flow back into crypto assets.
Yeah, so I kind of get to the same destination with a slightly different route. What I kind of look at is, this is actually one of my platforms, but I just look at volume. Okay, so everyone looks for like the percent gain of the day or the percent move of, like, you know, or the market cap. What I kind of look for is the volume and which way the volume is directing. So you can see USDT has 33 point fucking, it's got $30 billion in it right now, volume, and that's just moving. You know, that's just USDT moving. If you want to go market cap, you just click here and it will show you that USDT's got probably around 80 bill in it right now. So you're seeing 33 bill moving with an 8 bill market cap. It's insane. Like, Tether is where all the action's happening, and that's because people are moving in and out of Bitcoin. You've got Bitcoin here, which has got 18 billion, Ethereum, and then you have the other coins. But for me, USDT is just the lion's share, isn't it, really? We only have 8.4 volume. It's not really moving in terms of market cap. I think Ethereum, sorry, not Ethereum, USDT, where is it? So we got USD coin. The whole market cap is 31 billion. Tether's at 80 billion. So it's like a third, you know, 2/3 bigger. So I think USDT is the main winner, obviously. But yeah, it's an interesting chart to look at. But I kind of keep on, I just look at Dixie in general and look at it and say, okay, look, if the Dixie's rising, you're probably going to see, you know,
Pressure.
less money. Yeah, there's less pressure, exactly. And you're going to see less people selling things. And if the Dixie is going up, and this is not just dollars, but if the Dixie is rising, you're seeing people selling shit into the dollar because it's increasing the purchasing power of it, making it stronger. In terms of analysis, though, I do actually think a lot of people think this is going to go straight here. I actually think that we're going to find support around here somewhere. And I think Dixie's going to have another go. Even with all the shit happening, I just don't think all the things happening macro with the dollar will affect it tomorrow. I think actually these things will probably take a few years to play out, but I think Dixie is going to have another go. If you go on a lower time frame as well, you can see here that, you know, we've had a nice move, a jet off to Peru. This is actually quite similar to what Bitcoin did, except it actually broke this level. But you can see it's come down. It's retested this, which is a good sign. Now it's got a long way to go down. So if we can hold here, guess what? You're looking at potentially some sort of ascending formation. You could break it. So I think it's quite good. And I think that the Dixie will have its rare, you know, rare its horns again to the upside. I think Bitcoin will. Just to say one thing about Bitcoin as well before I let you say your shizer. You know, it's like, I think Bitcoin probably has bottom looking at this chart. You know, a lot of people will say why would you say that now? But looking at the structure of this and where we're at, there is just so much support now underneath us from so many different things. I think it's quite likely actually that Bitcoin has seen a bottom in. I do think we can come low to 25. I think these things can happen. And there is always the idea of an unforeseen event in the future, because we obviously have the ability for the market to do something crazy, I think, in October, looking at the interest rate yield and all this kind of stuff coming out. So it's a combination between an inverted yield from 10-year treasury to 30-year, the 30-year treasury, and then the interest rates, the Federal Reserve interest rates. I do think there's a correlation there. There is actually some interesting data which has come out recently. So I could see maybe there be some sort of flight to safety at some point, which might correlate into gold, or I think it'll probably be the US dollar still. And then that would be a buying opportunity, but I can see that playing out as well. So I think as I look at the chart right now, I think it's quite likely it's in. But if you do see some sort of unforeseen event, which we can't forecast, I think that's a buying opportunity if we do get it. So that's kind of what I'm thinking on this market right now.
So as somebody that's been in markets for a long time, and, you know, you've made more than just a couple coins in your pocket, what would you recommend to somebody, say they've been in a week or a month or even a year? You know, the learning curve in crypto is very slow at first, and then after the first, I would say it takes about honestly, minimum of about a year and a half to really have any sort of meaningful grasp of the markets. So in terms of like relating strategy, like an effective strategy to somebody that doesn't have, you know, all the different paid tools and just basic strategy, do you recommend somebody scalp and swing trade their way up, or are you more recommending of a position, identifying good accumulation zone, holding it through some, you know, what's a crypto millionaire strategy suggestion?
Yeah, it's an interesting question. You know, I think I don't want to be the boring motherfucker and say everyone's different, so do what works for you. But, I was in a lucky position where before I came into crypto, I'd actually made some money in trading. So at the very, very beginning, like I said, it was just like a year of doing nothing, but I actually did make some money in trading, which allowed me to then get into crypto and make that kind of big wins. But I would say that, for me at the beginning, it was really beneficial doing lower time frames. I think a lot of people don't understand this about lower time frames, but it's not actually degen in any way. Everyone's like, if you're on the 1 minute, you're a degen. You're only a degen if you're a degenerate. You can trade the 1 minute and not be a degen. You can be a good trader and trade the 1 minute. You can trade the 1 second and be a good trader. I know guys who make a lot of money on lower time frames, high velocity, and they do really well. It's not, everyone thinks that being on a lower time frame means you're automatically a shit trader. It's actually not true in any way. You go on a bond market, they're using 1000x leverage and they're trading these super low levels. So high velocity 1000x, they're not degens. So I think actually doing lower time frames is really beneficial at the start. I can't say that for everyone, but just for my experience and how I came up, and I did 9 months every day, traded lower time frames, scalping, day trading.
And this is spot.
I'm talking 9 months. Yeah, that was spot, bro. At the very beginning, this was way back in the day. This is I traded every day for 9 months, in and out, just buying, selling on lower time frames. And this was going from no experience to probably after that 9 months, I felt like I learned more than I probably have learned in the last 9 years. So that 9 months there, just lower time frames, in and out every single day, trying to day trade, was absolutely one of the best learning experiences I ever had, because on lower time frames, you see cycles play out so quickly. It's like Russian dolls, I use this analogy. It's like, it's all the same things happening. It's just the reliability goes up generally on higher time frames, because on a lower time frame, anything can happen in terms of a big person coming in and moving the price quickly. So it's a little bit less reliable on lower time frames, but you see hyper cycles, because when a market rallies, hits a high, dumps back down to the 618 fib, holds support, retests the high, makes an ascending formation, breaks that high, jumps up, does an extended move, 786, comes up, retests the previous high. You're just looking at a bull market on a higher time frame. Yeah. That's what Bitcoin just did. It went from $600 to $20,000 back to 3. You can actually do a nice measure. You can do a Fibonacci on that. Then it went to 70, and then it's just retesting its previous high, Fibonacci retracement. So it's just doing the same thing on a higher time frame. So if you trade lower time frames at the very beginning, you're going to force yourself to see a lot of cycles happening a lot of times. You're also going to force yourself into a lot of bad situations, because when you're trading every single day, you have to make a lot of decisions. If you have to make a lot of decisions, you have to learn from a lot of mistakes, because you're not going to get everything right. So you force yourself to be in difficult situations. That's why I'd say probably simulate at the beginning. I simulated or did paper trading for, I don't know. I probably did it less time than I should, because I was like, fuck this. I just want to put some money in the market. I probably did it for about 6 months. And I had my good mentors in London as well, who got me into trading. And one of the reasons I got into trading was by just seeing a chart from someone I knew. And also I used to look at my dad's stuff when he had this like 401k up or something. I don't know what it was on his screen. I was like, what is all that shit? This is when I was probably 8 years old. And that kind of like, my mentor put me through this kind of journey of the paper side, which I do think is important. But I have actually got a bit of a, I would say, a controversial view on it. I would say it's good, but it's good, but it's not real, so it's not good. But
what, the paper trading, you mean?
Yeah, it's good, and I would always say do it for a bit, but I think it's overrated actually in some respects. It's good to do, paper trading is like doing the gears of a car. It's like doing F1 practice in a simulator. Yeah. You can never really, it's not really the real thing. Like,
well, your emotions are not going to be triggered the same way as when your capital is on the line. And if your capital is not on the line, you're not going to learn risk management.
Of course, yeah. That's what the point I'm trying to get to. It's like, it's not the real thing, because you're not going to feel the same way. And also simulated trading can be quite, I've seen people, it's actually quite dangerous in some respects, because it actually makes you think you're better. And then you come into the market with a little bit too much confidence. I actually know a guy who he was called John T, my old friend. I won't say his surname. Be pissed off because I'm saying that he lost everything. But he was doing a lot of simulation stuff and got extremely confident at one point. And I was like, and I'd already been trading for a few years. I was helping him out, showing him a few tricks here. And I was like, yeah, man, being supportive, like, yeah, but when you come into the market, just be careful. And like, he got super confident because he did very well. He had a really nice equity curve. His P&L was good on this paper account. Woohoo! I'm so fucking great. And he came into the market, and he actually, it was his hindrance at the beginning because he lost a lot of money, and he lost too much at the start. And sometimes that can really, it's like falling off a horse when you're too young or something. You just get really scarred by it. And like he never really came back. He never came back. So I would say it can be a bit dodgy because, it's good to do it, but have a mentor next to you who will tell you that, remember, this ain't the real fucking deal. You're not actually fighting with real swords. This is not the real deal. And I think a lot of people need to understand that, because if you get too confident, you win too much on that side, you're always going to lose in trading. I always tell you, you're always going to lose everything once. You're just going to. You need to lose everything once, because if you don't, you have to lose everything once, because it's like going to the casino. If you win the first bet, you're not going home. You think you could do it every bet.
Yeah.
So you're going to lose everything once. And like, sometimes that once is too much for people. And it's a shame, because they might have done okay if they carried on.
So I'd love to see if you're willing to share, if you could pull up, it doesn't matter, you could pull up any chart and just give a couple examples of how you, for instance, like a trade setup or two, and based on that setup, like even this right now on Bitcoin, if you were to trade this on the 4-hour chart, what would be your setup, and how would you approximate the risk for stop loss and a target on for instance, this trade?
Yeah, I'll do it with you right now. So I have a VIP community I speak to, and I tell people what I'm going to do. I have the luxury these days of not having to take every trade. So for me, it's, I can be more of an analyst because I've traded for literally freaking 10 years and I've taken a lot of trades. But like, I have the luxury of being able to stand back and look and say the trades I would take and take the ones I want to take. Some people don't have that same luxury. But in this specific example here, let me just get my tools out. This is actually a really, really nice setup, because 32K is the next logical resistance. And I'd be buying right now. Like, I'd be buying right now. I'd say if you're looking for a failure point, 28K is a little bit low on the stop loss. This would probably be okay. This is probably about 3-1 if I just look over here. We're looking at, if you went to the top side of this, 12% for a 4% loss. So it's pretty good. I'd actually probably have the stop loss, though, a little bit lower than this on this level here. If it came into that, I just get stopped out. If it comes back up, you might get another entry. But I'd say this is quite a nice position, actually, for a long. The market's rallying. This is a buy. I think this could be pretty juicy. If I was right now trading, I would be looking to buy this. The invalidation is 28K for sure. If it goes below here and begins to stop, it's quite likely, even if you did get something like this and it wicks you out, you got to remember the market's going to fuck you over as well. If it wicks you out like this, then goes like this and carries on, at least that gives you a little bit of time to recalibrate what you're doing. And then maybe potentially get back into some sort of swing or some sort of scalp long. But the more likely scenario is it comes back down to this, wicks you into resistance and breaks down. And then actually what I'll be looking to do on the vice of that is just flipping the trade on its head and just going like, okay, look, if you want to do the opposite of this, 1 second, legends, I would say that this is probably the area to look to sell, and that's the area to look to like this. Okay, so this would actually probably be a nice trade on the other side. If you actually did come back up for this SR level, and this is quite vague, guys, just trying to get this as good for the video as I can, but this would be kind of looking like this is the inflection if we find support here, which we have. If we came down like this, let's just say, for example, we came up here, we came back down, we broke it, we came back up, then I'd actually look into short here. So this would be an entry for a short. Because actually, I think probably...
I just want to pause you there, because you're pointing out something that is critical, I think. It took me too many trades to learn this. And to be honest, I still, I think you'll admit this as well too. The emotions of trading never go away. And even though I know price action tends to, break, if it's going to break down at some point, the ball is going to bounce, and it generally will go, if it's very weak, to the 382, but generally, a pretty high hit rate up to the 618 level and test. And this is where that level where it goes back, that level where it goes back up is where it traps traders that, a lot of people, they buy along, they get wicked out. or even a short, doesn't matter. And now as the price is going up, it's like, oh, well, I want to catch this now before it goes up, and then it only reverses. This is a suckers rally that so many people get trapped in. So it's really important if price does go down and wick you out, or goes down past a level and starts to come back up, that you don't just try to front run the trade. Allow the trade to have the structure present to be present.
If you draw a fib on this as well, it could be quite interesting because, you know, I think actually we will get potentially some sort of 618 on this. It'll probably be looking at around, yeah. It's quite interesting to see. We have a nice 3-point, we have a nice fib coming in 382 as well. So this 25K region's got a nice little bit of confluence from the lows. But yeah, that's like one trade setup. So this is, you know, this type of, you know, trading style is just something which I've been doing for so long because it's so, let's just say the word is that it's so reliable on the ability not to lose money, because it's almost what you're doing is you're just playing the pivot, right? And you're saying that, okay, look, I'll just short or I'll buy or sell the retest, which is the confirmation, because there is no confirmation of this move. You know, right. If you're trying to short into this, it is in essence just gambling, because, you know, yes, you might be coming into something, but there's no real confirmation of structure, which has shown you that the momentum has changed. And I don't care how many levels are there or how many fibs levels are there. It's still just going into the market rallying. And we know that markets can keep going for a long time. So, you know, it's a strategy which allows you to mitigate your risk. And like one of my guys who I always used to listen to, he actually wrote an ebook on it as well. There's a guy called Andreas Quim, I think his name was. I can't remember his name now. He's got some good stuff online as well, but he always used to have this narrative, and he used to say stuff like, fuck if I can remember what I was talking about after going on that tangent. Wait.
Are we talking about the reliable pattern going into a trade?
Oh yeah, of course.
Yeah.
Like the number one rule is not to lose money. It's not to make money. Trading is not to make money. It's not to lose money. That's the number one rule. Don't lose money. That is your ammunition. That is what you need. Like, you can have as many guns as you want. If you haven't got any ammo, you still can't do anything. You can just fire blanks forever. You're never going to get anywhere. So the first number one rule is not to lose money. And this strategy in itself allows you to have a logical entry which has a good stop loss. And that means that, because it's quite likely a lot of the time that you're going to get at least something from this level. You know, if you listen to or you understand straight SR strategies, previous resistance usually turns to support. So if you look to buy here, it's likely you're going to get something. So even this tiny move up, it still means you can begin to recalibrate your stop loss. And if you do want to go into break even, then you can. But like, if you're trying to then, like, this move going up here, and you're like, okay, I'm the short now. Oh, stopped out. Oh, I'm the short now. Oh, stopped out. A good example will probably be lower, because everyone's trying to short the way up, right? So this is a good example where the market begins to pump, and you're like, okay, what I'm going to do is I'm going to short here, stopped out, short here, stopped out, short here, stopped out. And then after all of these trades have been stopped out, you eventually get your short, and you're like, oh yeah, I called the top. But by the time you get it, you've lost too much anyway. You haven't made any money. You've not made any money because you've been stopped out 5 fucking times. So if you, I do on my Twitter, like, I show trades where I get in at tops and bottoms, okay, because it's sexy and it's good for the content or whatever. But if you actually see someone who is posting a chart of him buying or selling the top or the bottom, it usually means they're not profitable, because to get that position in the first place, you have to be doing something that isn't going to make money long term, because you have to keep trying to buy the top. It's not like you just came into the market yesterday and just clicked sell exactly on the right top of all the tops it could have been. So most cases, not everyone, but most cases, if you see someone who has an entry at the top or the bottom, they've tried to get that for so long that they probably lost so much before they got it that the wins aren't going to outpace their losses. You know, with me, I do it sometimes because it's kind of sexy. It's fun. I have my positions, but that's because I'm taking these positions high probability over a long period of time and looking at multiple different factors. Most people can't do that. And also, I don't want to go into this too much with my trading bot side, but because it's boring, but this is the thing about trading. You know, you can still lose 8 trades out of 10. I'm not saying you can't make money. You can still lose 8 trades out of 10 and make money. Because if you do have a strategy like my trading bot, you know, it will lose in the ranges, but it will massively win in the swings. Okay. If you have something back tested which can do that, you can make money. But generally speaking, if you're trying to always catch the top of the bottoms in a day trading sense, it's very, very difficult to make money, because you're just it's just gambling at that point, and you might as well just leave gambling to the casino, because trading is not a casino. You're going to lose everything even faster than the casino.
Man, that's dropping gems right there. Everybody, I just want to just shout out again, come over here. Make sure you come and follow MDX on his Twitter and on his YouTube. He's got a great stream that he regularly does. We're going to continue on just a little longer here. I got to, you just brought up a key point that I think is really important. It's not just trading an asset. A lot of people in this market, more so than not, I think, dabble in more than just Bitcoin. So what are your thoughts on, just generally diversifying? And then after we talk about that, before we wrap out, we could talk about a couple of the, top mid cap coins. And then if you have any couple, a couple gems that maybe people have not generally been looking at or what. So I'll let you take it away.
Yeah. So for your first question, it was diversification. Okay, so I don't really see. Okay, look, I traded FX. I've bought Russell. I've been in stocks and shares, individual stocks and shares. Okay, but since 2018, I haven't really been diversifying. I've been in crypto and gold, actually. Gold. Okay.
Let me rephrase. I don't mean straight on diversifying between like crypto and traditional assets. I'm talking about like even if somebody's 100% in crypto, what's your thoughts on diversification within crypto? That's a better way. Yeah.
Okay, well, the premise of diversification is because someone doesn't know something. Okay, so it's not because you're clever; it's because you're stupid. Diversification is a strategy to use because you don't know what the best winning race of the horse is. That you don't know you don't know what the best horse in the race is going to be. Okay. Diversification is a way to mitigate out your risk because you don't know, because you're stupid. People, I hate all these guys who come up like, oh, I diversify every single day. Well, it's because you don't know anything, bro. If you knew really what was happening, you would only bet all your money on the one thing. But we all know that we have to diversify because we don't know. It takes you down a level in your ego.
And just to clarify for everybody there, he's not calling you all stupid. He's calling all of us, himself,
everyone's stupid,
myself, none of us. It's honest. It's a recapturing of humility. And if you're not a humble trader, then you're a trader at loss.
You're a poor trader.
Yeah.
If you're not humble, you're poor. Yeah. If you want to be right, and you can either be right or rich, and a lot of people go for right, and that means they're going to get wrecked. Because if you want to be right in this market, you're going to end up losing everything. So yeah, you got to be humble. Because we're only a human being. We're an animal. We're made up of just like fucking a blob of matter. We're not an AI just yet. We can talk about that as well. But diversification is just a strategy because you don't know, but you have to humble yourself. I don't fucking know every second. And even if I did know sometimes, I can't know every time. I got to sleep and wake up and drink a coffee in the morning. It's just not practical. So if you practice humility and you're grateful for what you've got, you'll do much better in trading. But I think diversification in crypto would be, for me, very simple. I keep it to, with my actual portfolio, most of my assets are in Bitcoin in terms of HODL, and I just hold on to Bitcoin forever because I understand that a long-term HODL strategy in Bitcoin and buying the dips is actually pretty darn good looking at what it's done in the last 10 years. But I do have like a specific amount of my portfolio, which I do have trading on my systems and swing trading. So it's actually kind of shocking how much more you can make by just playing a very simple EMA strategy on Bitcoin, but having it automated so you can't fuck yourself over, because you will fuck yourself over every single time. You need to just have it automated. You're going to lose for 6 months in a row, but if you really do leave it and you have an automated system, which is just trading a very simple EMA strategy, you can make yourself 10 times more Bitcoin in 3 years, for instance. But most people cannot even think about 3 years. Most people can't think about 3 minutes, So long time, you can, if you do swing trading is very powerful. If you automate it, and you can make a lot more Bitcoin. But HODL is like, it's HODL, it's okay, it's on the ledger, don't have to worry. Every single amount of extra bit of trading you do is more risk. Sometimes you just want to chill out, glass of red wine, relax. So I got the medium swing trading system. I have my HODL. And in terms of diversification in crypto, I just said it myself, there is not much diversification. It's mainly Bitcoin. I do own Ethereum. I do have my microcap altcoins. I do have some cash on the side. I've actually been accumulating a lot of cash right now. So I don't know, I'm probably about 10% USDT right now, actually. So this is in essence shorting. I look at this as a short. A lot of people think you have to have, on Bybit you have to have a short signal on, but no, I look at this as a short, because this money would not be anywhere else other than crypto if it wasn't in cash. So it's been taken out of crypto to go into cash. So I'm in essence short right now, but that's my cash position. But then I have this huge hodl position, which is my net long, which I'll always hold. And I just look at it as kind of like a hedge short against what I've already got. And then again, like we said before, with the leverage side, that is the ultimate reason I use leverage, actually, is to short against my spot. It's a really, really beautiful thing. You can just be like, okay, well, I've got 15 Bitcoin here. Let's just put 1.5 here and 10x short. And then the risk is the stop loss. That's how much you're going to lose. We didn't have to sell all the Bitcoin. So it's great. And then in terms of altcoins, I've got some really interesting altcoins, actually. I like Ultra, I like SMT. I actually get my list up for you in front of me so I can actually get them out. I actually did buy some Palm as well, some decentralized exchanges. Oh, it's logged me out, the bastards. I've got my whole little coin stats up here. It's logged me out. Let me get it on my phone. I'll give you some gems, bro. Quickly whip this up for you, leggies.
And for all of you that are tuned in right now, I want to say thank you for being here with us. Thank you for being here with Mr. MDX himself, Max, the main man, the legend. Make sure you're hitting that like button, you're hitting that subscribe button, and you're dinging that bell. Let YouTube know you're liking this kind of crypto content, because this is what it's all about. We gotta teach the world. We got to give the financial education to the world, because for some reason, I don't know what it's like, Max, in the UK, but it's shocking how not only the lack of, but the complete absence of financial education in our institutions. It's crazy. So these things,
I'll just say a few more alts, bro. It's I really like CoinWeb right now. I think they've got a big partnership, actually. I don't know if I can even say it, because they sent me something and it was like a really big partnership. I've got quite a lot of BNB right now, actually. I need to probably repopulate this. BNB has really gone up in terms of some other altcoins. I've got a lot of DEXs like DYDX. I've got my CRO stuff. I've got Plutus, Palm, Ultra. I've got a big cash hit right now. And then obviously ETH. But yeah, there's some small ones as well, which I made some bets on, which failed. I remember I thought IOST was going to do well. It's so funny when you look back at some of your stuff, because I check quite a lot, but you scroll down, you're like, fucking hell, why did I buy that one? And it's just like, it's interesting, isn't it? But the altcoin space is, it's literally a blessing, the biggest blessing ever, because it's just so unregulated and it's so fucking massive gains. Some of these altcoins are probably going to be some of the next companies of the companies of the world. And we have the ability to be able to participate in that at the lowest barrier to entry. There are obviously some coins which have very nice seed rounds and very nice influencer rounds, but a lot of these coins should come out, which are good, solid projects. They've come out and it's very, very low. You can get in at, it's pretty decent.
Yeah, I mean, it's just amazing, being involved in this space. And to see, for I've been in since about 2015, 2016. And I did, some traditional trading and stuff before that, but nothing like once I got the fire sort of just absolute like bonfire in my brain and in my heart and in my spirit. Once you start looking into Bitcoin and crypto, and essentially I look at it like I talk about it on my channel. It's like the Industrial Revolution, the rails of the Industrial Revolution. This is what that is now. We're a digital revolution, and the rails of the future is built on blockchain, Bitcoin being a huge part of that. But then all of these different utility tokens, whether you're into Cardano or AVAX or Atom or UOS or Engine Coin or Gala, there's so many different plays. And, I just want to really help encourage people not to feel in any way like you've been left behind, because even if you've never bought and you're watching this stream, you are 1,000% ahead of people, like the majority of the world, because most people only know what narrative the mainstream media talks about the volatility in Bitcoin. And the beautiful thing about it is, I think this, especially coming out of 2022 into 2023, volatility in Bitcoin and crypto was the main sort of hindrance to people coming in. In reality, when you're in it, you realize the volatility is what makes you money. Now, in addition to that, the interesting thing in 2022 is the massive bear markets we saw and massive drop in a lot of tech stocks and other stuff, the volatility that they didn't really talk about then, which outpaced some of the volatility we saw in things like Bitcoin and Ethereum. So the narrative is definitely starting to shift. So as we wrap out, we got a few minutes left. So just like your thoughts on that, and any words of encouragement, or anybody that may be on the sideline or feeling lost or they don't know what to do. Like, how do people deal with that?
I'll say one thing about volatility. Volatility equals opportunity, of course, but it's all a lie. Volatility is not the reason. Volatility is not bad. Like gold is known as a safe haven asset of the world. It's money, and it fluctuates 50% on swings. Just look at it. It takes a long time to happen, but it does. So volatility is all a lie. The volatility is not what determines something's credibility in any way. It just means that it's either a small market or there's a lot of participants who have or hyper leverage. But yeah, no, I think there's like killer. You haven't got people who have channels called like MDX Tesla, or maybe some guy does, or you have MDX Fiat or MDX
MDX Fiat.
Yeah, like it's just fucking no. The reason crypto is powerful is because it has a growth story behind it, and that growth story is about revolution, and revolution is power, and revolution is movement, and that's what gets people excited. So like crypto is just a new technology which is more efficient than the prior, and all innovation is just an increase or making things more efficient. That's just what it is. And then sometimes you have something which is so innovative, has so much insane innovation that it almost doesn't even look real. And I think the last thing we had was just AI with ChatGPT. I think that was something which people scratched their head and said, shit, that's not fucking real, but it is. And I think the last thing like that was probably the iPhone. I remember when I first held that, I was like, this is different. And I was like, that really, you had that moment where you're like, oh shit, like what the fuck? I can actually move this thing. And then probably before that was maybe something like, I don't know, it was probably internet, something to do with the vehicle, maybe the first car, like that. People didn't even understand that. So I think Bitcoin and all this has a growth story, which allows you to have some sort of other purpose within it. It's not just about price action. It's also about changing the world, which is amazing. Trading US dollar to Great British Pound is just like whatever. And it's got this nice story. And also we have to remember that the banks are all complete crooks. They literally take depositors' money and then they loan it out and they go on as much leverage as they want because they know they can't lose, because the world depends on banks. And if the world depends on banks, governments will force you, an individual, to bail them out. So they're complete crooks in every single way. It's getting worse and worse with SVB. One of the main things I got into this was because of the bank side of it, because I understand that the banking system, I have friends who work in investment banks. I have guys who work in Japanese banks. I have guys who go around the world who are friends of mine at school and stuff. And they're all just pricks. I hate them all. I was friends with at school, but I hate them. I hate the way they look. I hate the way they think of themselves. I hate them because they're so up themselves and they think that this whole thing, and they know they're scamming everybody. It's a load of bollocks, especially like private investment banks. Oh, disgusting human beings. But like, and I didn't say I came from that world, but I knew that world a little bit more than most people from the schools and the people I was with. So they're all crooks. The reason these banks are getting away with it is because of fundamentally comes down to the premise of just like fascist ideology, or you could say fascist fundamentals within society. And this gets really deep, but it's just the fact. It's just the truth. Governments and banks are in bed with each other, and it's just showing human beings why socialism isn't a good thing, and why we need something which is more freedom based, and it enforces types of integrity into society. And that's what I think. That's why Bitcoin feels so good, because it forces integrity by what it is, because you can't change it. It's just the same thing.
And the crazy thing about it is, it's so ironically like mind blowing to me.
People say it was a scam. It's hilarious. The banks say it's a scam.
Well, they talk about like. I could go on. I mean, even I think, what is it called? 99 Bitcoin, or what's the website that shows all the times Bitcoin has died based on?
I remember that. It's like,
But all this, negative FUD push from the mainstream media, Elizabeth Warren, I won't even say Warren Buffett, because he doesn't necessarily FUD it. He just doesn't understand it. And for him to really buy into crypto and speak positively about it could completely undermine everything that he's worked for, right? So it makes sense that he's not behind it, because I spoke about this on a show the other day. If he were to transfer one for one his wealth into Bitcoin, the U.S. economy would probably, it would be like an Enron event or larger, because it's such a large amount of capital going out of the traditional asset space into Bitcoin. And the reason why there's so much fear of it, the fear is from the transparency. They talk about it being, I remember when Charles Hoskinson was on, he was speaking in front of Congress, and they're asking, what can we do so we can audit this? And he's like, you're kidding me, right? I mean, the whole structure is built for you to real-time live audit it. Anybody can. Real-time, on-chain, the second any block processes, you can see the interaction of every Bitcoin on the network, how it's stored, what wallets it's in, where it's been, and the history. And the fact that they had any narrative about the fact that it was used early on, of course, it's terrible, but for the Silk Road sort of thing, in reality, that showed an incredible use case. Now, was there some nefarious stuff? Yes, but I'll tell you what, before Bitcoin came around, the only way you could ever buy drugs before that was with fiat dollars. And look at how much money is stored in banks that's money laundered from the Mexican drug cartels or any
honestly, they're complete crooks.
Yeah.
And they have the cheek to spin it around on a nascent asset class and say that's the problem.
Yeah.
Like, it's an absolute, it sickens me. And like, that's why I want to see all banks done in the next 10 years, or let's just say banks which use fiat currency. The great thing about crypto banks like Crypto.com and Nexo is that they can't do fractional reserve. They can't just go to the government and say, should we just keep lowering the level of the amount of loans we can make? You can't do that. So you can't do that with Bitcoin. So every type of transaction is built around Bitcoin. The whole underlying belly, the plumbing of crypto and blockchain stops this shit. It's impossible to get the government to say, oh, let's just do fractional reserve Bitcoin. It's like, no, motherfucker, it's done. You can't change shit. Shut the fuck up. I shouldn't swear too much, like you said, but family show. But honestly, it's just all, human beings are always going to corrupt. And this is the only way we have to have things which are outside the bounds of human beings to control, to create real regulation. And that's basically the essence of it.
Man, I couldn't agree more with that. So as we wrap out the show, pull up that Bitcoin chart one more time and just let for what are you looking at? What are your and obviously there could be 400 different outcomes, but when you're looking in through the end of Q2, what would you feel like, just in your knowledge of the charts, where do you feel like are the two most likely spots Bitcoin might be at the end of Q2?
Yeah, interesting. I'll give you my crystal ball, legend. I'll do my crystal ball with you right now. So there are a couple of scenarios, obviously, but I would say Q2, end of Q2. We're getting towards that now anyway. We're getting towards the beginning of Q2, and then we're going to get into that 3-month period. But I would say that, generally speaking, the inflection point is $30,000. I'll make it really simple. If we hold a weekly above 32, I think the next levels are 42, which we're looking at around here, 42,000 in here, and then 48. If we don't hold this within the next week or two, I think we're going to be at around 25. But like you say, Q2, it's $30,000 is the inflection. I think we're either at 42 or 25, and I actually do think that's probably more likely at 25. I say my hunch lies that we're going to go to 25 next in terms of just everything I'm looking at. I think that 25 is probably the next number we go to. It's either going to be. I got to
ask you, if Bitcoin goes to 25, is that the end of the crypto market? Does that mean it's over for the bull run?
That just means we're just getting started, baby. That's what we want. We want it to go to 25, so then we can rebuy.
It's a healthier push up, yeah, for sure.
Yeah, 25. If we look at 42, I think it's just going to be a similar scenario to here. We do have a nice. This is actually just like history speaking again, but we have a nice Fibonacci retracement back up. If you just draw it from there to there, 618 golden retracement, 20 to 14. If we did come all the way up, we'd just be doing a similar thing. If you do a retracement on that from the highs, quickly whip this up for you, my leggies. You go to the low to the high, you're looking at around exactly bang on 48. So it wouldn't surprise. It wouldn't be like out of the realm for Bitcoin to go to 48. I think it's more likely that we'll see 25 before we get 48. And I think that would be a really nice spring. I think some of the momentum indicators are quite over the top at the moment. And I just think that looking at a few things, the long and short ratio is not perfect, but I think it's something like this. And we shoot off. But I also do think October we're going to have something as well. So I can't go too far ahead. Can't go 6 months ahead. Yeah. But
no,
yeah, I think we're going to get.
That was excellent. You know, that 25K would be such a nice retest of that long-term sort of ceiling that we were just butting our heads up against. And as I mentioned on the show yesterday, everybody, remember that short-term holder realized price is right now, it's about 23,400 or so. In the next week or so, it's probably going to be at about the $24,000 level. And we've seen historically on that short-term holder realized price, once we break above it, and we've already retested it on this pullback right here. On this pullback, where's my mouse at? Or annotate. On this pullback right here, we retested that short-term holder realized price. And now the short-term holder realized price is somewhere in this region. So coming back to this would not only retest this key level, it would also especially if we hold above it, then this would be incredibly bullish for at least the interim, 4 months or so, maybe into October, 5 months. But then what do we have coming up, everybody? We got to remember we have the halving coming up, and we're only in a pre-halving bull market right now. Until something changes, the likelihood that we get a pump that pulls back is very high versus just going to new all-time highs from here. So be prepared. MDX, I got to say, man. I love chatting with you. I appreciate your time here. Do you have anything else you want to say before we close it out?
No, legends, just if you're trading, stay safe. Watch 28K. That is literally the next couple of weeks. Watch 28. If we lose it, we're going lower. If we hold on to it nicely, we're probably going to go higher. But yeah, no, it's good to come on the show, dude. I'll see the video when it comes out. And yeah, go subscribe to me. And just generally, I just trade on these markets. So check it out, legends. Yeah, man, I'm gonna throw it over to your stuff here real quick. Everybody, make sure you come over, follow him on his youtube.com at MDXCrypto. You can find him, and also Twitter at MDXCrypto. He's got a wealth of information. He does space, he does YouTube, and he is quite the personality. So with that being said, everybody, hit that like button, hit that subscribe button, ding that bell. I do want to apologize for anybody. I don't care how filthy your mouth is at home. Usually we keep it pretty clean here, but we're talking real talk today. We're talking real. We're sharing. Yeah. I'll go pray in church and I'll say sorry for my sins. Yeah. But I just want to say, everybody, thank you for being here with us. Make sure you check out all these socials down below. Hit up bitlabacademy.com. Check it out. We have all the new courses and all the new content rolling out while I'm here in Atlanta. I'm leaving May 5th, so that may give you an idea when that's happening. So with that being said, there's Mr. MDX's face right there. Hope you all have a wonderful day, and I will see you all in the next episode. Adios, everybody. Adios, muchachos.